Hello and welcome to Share Talk. I'm Charlie Gibson, and today I'm joined by the founder, chairman and chief executive of Red Rock Resources, Andrew Bell. Andrew, very good morning. Thank you very much for joining us.
Morning.
So describe Red Rock to us in, I suppose, what they call an elevator pitch, don't they?
Elevator pitch, well, let's just go from the first to the second floor. Red Rock is a company that started off with iron ore and manganese in Australia. We're left with an interest in a manganese asset through Jupiter Mines, listed in Australia. That interest is worth more than our market capitalization. That's got a manganese mine in South Africa that's one of the best in the world and the longest life in the world. And then we diversified a long time ago slightly into gold. And so we have royalties from a mine we brought back into production in Colombia. And we have a 1.2 million ounce resource in Kenya, about which I'll talk in a minute. And then we have also, having got used to dealing in Africa, we got involved in copper cobalt in Congo.
So if I were to ask you to rank your assets in terms of importance to the company or management time spent thereon at the moment, how would you rank them? Those three assets, the choices: gold in Kenya, gold in Colombia, and copper cobalt in DRC. How would you rank them?
Well, let's look at different bases. If you're looking at it on a breakup basis, say someone coming in and ripping the thing apart to realize what they could, then Jupiter Mines would be the biggest, most marketable asset because it's a public company. You've got a price on it.
Just tell us, what is that worth to you now in pound shillings?
It's probably about 15-20% more than the market capitalization.
Right. So you could argue if you buy Red Rock, you're buying the shareholding in Jupiter at a bit of a discount.
Yeah, but
and everything else you get for free.
We have a bit of convertible loan stock that is below the conversion price. So, when it's below the conversion price, we have to look at it as debt.
Yes.
So you deduct that,
right,
which means that the Jupiter isn't quite market cap. So then if you were looking at it in terms of the value that should be appraised at, then I think you're almost at the stage where you look at the Kenyan gold asset, where we had to fight to establish our ownership, and you'd say, I think they've got that back. That's worth 1.2 million ounces of gold as a base for exploration. I think that's probably the biggest tangible asset. In terms of what we think the future should be once we do some exploration and can take things into the JORC category from the pre-JORC, then I think Congo by a mile.
Okay. Why don't we talk about the Kenyan gold asset first, called Migori.
Yep.
You've got 1.2 million ounces.
Mm-hmm.
Where are we in terms of its stage of development? Where are we trying to get to?
Well, we spent $10 million plus in a couple of seasons at the beginning of the decade. And then there came some political interference. And it's Africa. Commodity prices were high. It was a particularly, I suppose, difficult part of the country that was a stronghold of the party that had been the main opposition party, and there had been some hotly contested elections leading to a change in the constitution in order to make sure that peace prevailed. And we had to navigate our way through that, and we had a minister who ended up, in his brief stint, with a lot of litigation against him, of which we were one. And so from beginning 2014, the storm clouds were gathering. 2015 to now has been the process of getting it back. So you can say that no real work has been done there for a few years. And when we got that 1.2 million ounce resource, CSA, JORC resource, when we got that was only ever seen by us as kind of setting a baseline, looking at the previous exploration, doing a bit more to supplement it, and then seeing where we were so that we could go back, and by focusing on the areas with high grade, we could build them out, increase the resource, but also our expectation was we'd be increasing the resource and increasing the grade at the same time. So that was going to be the really interesting stage of exploration. And we had to stop it and only now we're able to go back there. Providentially, maybe God smiles on us sometimes. This is when the gold price is beginning to move.
So at the moment what you have is a resource. The next stage is to expand that resource and then presumably to do a study?
Well, we put in on part of the license for a mining lease to start mining, and that was on some tailings there, where there was 70,000 ounces of gold at 1.8 grams a ton, and we thought one could make a project out of that. And we were doing a pre-feasibility on one of the richer parts to see if that could be brought into production earlier. But of course, what we want to show is something similar to the Acacia Africa baric acids. I mean, parallel with us, similar geology,
so this is
40 or 50 miles to the south.
So you're basically just across the border from their
North Mara
gold field in Tanzania.
Yeah. They've got several assets. North Mara is the nearest, and we should be a bit of a ringer for that.
So is your plan to take that project into production, or will you look to expand the resource, or get it to a certain stage and then sell it on?
You have to look at the realities, which are that if you're a big company, a really large one, say, I'm not saying Africa Barrick, but something that sort of size or bigger, then your funding is completely different. You can raise money at virtually 0% now, which means that your hurdle rate, if your cost of capital is that low, your hurdle rate is low. You also have all the expertise in-house for mine development, whereas as a small explorer, your geologists and consultants and so on are people who are good at the exploration. You almost need to bring on a new team like American football once you go on the
offense to defense.
Yeah, if you want to develop something. But also, of course, our cost of capital is high. I don't need to tell anyone who's either invested in the AIM market or run an AIM company how high the cost of capital is, whether you're looking at equity or debt. That means that with probably a resource that is not super rich in terms of grade, your required hurdle rate is much higher. Therefore, the logical thing is to marry your asset with a bigger company that has a low cost of capital to go on to the next stage, rather than dilute the capital of existing shareholders by ceaselessly diluting them. In other words, you benefit shareholders more by going externally for your capital than by trying to do it internally.
Okay, so I think we understand there your strategic thinking. Yeah. Have you been in talks with anyone about this yet, or is it too early?
Obviously, we have had various approaches. Given that we didn't have the license back, there's a necessary conditionality to that, which is a huge conditionality, which means that nothing has been announceable. But I think that the moment we get the license back, we will be moving into the zone where those discussions with several parties move up a gear. And at that stage, I believe we will have to make some kinds of announcements about the discussions that we may be having.
So we're waiting for the license to be given back to you.
Yeah.
Do we have any idea of what the timing of that might be?
Yeah.
As long as that piece of string, or
several weeks ago. I mean,
right.
Every day I get told.
Okay.
So we could be here in 6 months' time, and I'd still be saying, well, it was meant to happen yesterday. But dealing with governments is never easy. I speak to property developers here who are applying for planning permission, and they say, yeah, we're getting it yesterday, we're getting it next week, and then it takes a lot longer. Look at the Horse Hill people trying to get permits to do things for oil drilling in Surrey. Taken them a long time. The timetable is never quite what you think it is. So let's not just say this is an African problem. It's a dealing with government problem.
Okay, but this is a judicial process now by which you're getting
the judicial process was settled. The settlement said that we would have a priority application for the grant of new licenses under the 2016 Mining Act on the sort of through train provisions in the Mining Act.
So you're having to reapply, or you have reapplied, for the license again under the new Mining Act.
Yes, I would say that there's a special provision for all the people who had licenses under the old Act. So we've been treated as having those rights.
So you're sort of being, because you had those rights under the old system, you have priority, so to speak.
Yes.
Would that be fair? You said we could be here in 6 months' time. Would you be surprised if we were here in a year's time?
I'd be suicidal.
All right. So somewhere between now, within the next 12 months, you would expect, in the normal course of events,
hang on,
it wouldn't be unreasonable.
It would not be unreasonable to think that we would have that very, very shortly resolved.
Okay. Talk to us about, we spent quite a long time on the Kenya gold asset.
Yeah.
What about the DRC copper cobalt asset?
Well, having been through this process and doing something nobody said we could do in Kenya, having successful litigation, negotiating with the government, being patient, not making enemies, ending up with what looks like a satisfactory resolution. We thought, actually, we've always been frightened of Congo. Let's have another look. And when you have another look, the progress there is immense. I mean, there's a reason why in the last, period, 2 or 3 years, a few years, the only country in the world, as far as I know, that's opened 2 major mines is Congo. And there are several that I would describe as not quite major that are opening. So it's been the most successful country for mining companies opening mines the last few years. And everyone behaves as if they've got blinkers on. They're not seeing the changes that have happened. The new mining code, the better court system, the overhaul of everything administratively, so you've got a transparent online cadastre. And I would say that Congo is a country that you cannot avoid if you're in the mining business.
So you have to tell us a bit about the asset. I'm assuming it's on the copper belt.
Yes. I mean,
how large is it? What does it have? Does it have a resort?
Well,
all these things.
You've got the majority of the world's cobalt comes from the cobalt deposits in Congo. And of what's produced from the Congo, I would say that the majority is produced within a few miles of us near Kolwezi. And our direct neighbours, Glencore to the west, the old Katanga mining super pit there at Kov, which is still, as far as I know, operational, is down to 600 metres. And just to our east, there's a new Glencore T17 resource. Because that T17, Kov and us in the middle, used to be the kind of one of the great sort of super pits, if you can call it that, of the colonial era. Except in those days, they were only going down 100 metres because their cutoff was 2.5% copper when they were drilling ours, for example, and they were only looking at the oxides. And as I say, Glencore already down to 600 metres. In fact, the permissive mineralized sort of stratum for mineralization is down to 1,200 metres in that tiny area. And no one has gone down below 600 metres. I mean, if Congo wanted to produce twice as much cobalt, it easily could. When people say, produce 50% plus, but it could be going down as people produce more elsewhere in the world. They're talking rubbish. The cobalt is in the Congo, and that's where you have to find it. And there's no other company like us with a resource where we are, apart from Glencore, which, we're a gap in the middle because Gécamines were trying to keep it for themselves. There are just Chinese state companies around us. And the story of how we got this is we had a joint venture with Gécamines that was meant to give us some dumps. 2 or 3 times they screwed up and the assets had to be replaced under the agreement with comparable assets. And in the end, they just brought this out from their back locker and said, go and have a go with this. So we've got that, and we've got 2 other assets.
So almost compensation. It was you didn't get that.
Yes.
So we'll give you this instead.
And the interesting thing is that this was drilled in the 1920s and 1930s. And the amazing thing about Gécamines is that it's not like an ordinary company that gets taken over, moves its headquarters from South Africa to Canada, all the records and all the end up in a sort of container somewhere up in British Columbia, and all the core gets thrown away somewhere in Africa. The chain of custody of that core since the 1920s has been excellent. It's still in the same core boxes, marked up from the 20s and 30s drilling, in the same core sheds. It's been through civil wars, independence, everything, and it's still there. I mean, I knew the guy who did the resource on the Katanka Mining's Cov Pit and other assets back 14 or 15 years ago, because he'd just done a job for us. He's a Canadian geologist, went out and did that, and he produced the 43101 on those assets. He did it without 1 meter of new drilling taking place.
Because you could do it all from the existing inventory.
What was already there, and the geologists could look at it and feel confident in it. And on the basis of that work, you ended up with Glencore taking it over.
So so you have this. Remind us, what's its name?
Musunoi.
Musunoi.
Yeah.
You've got Glencore to the east. You've got Glencore to the west. You have some Chinese state companies around you.
Yeah.
You have a resource which is.
We have 92 holes drilled. And if you take the pit outline, has been partially backfilled, and you see what was removed and see what was left, then there's a reasonable amount even at the 2.5% cutoff. But if you lower the cutoff to 1%, of course, you get interesting numbers, and on the cobalts too, interesting grades. And this is without any drilling down below. So we know we have something exceptional there, but here we are. It's Congo. It'll take some work. It'll take some patience, and we just have to get there.
And do Glencore really need that ground in order to mine the whole area as effectively and efficiently as possible, or can they go around you, so to speak?
No, I mean, I don't think so.
How confident are you can do a deal with them?
Because if you look at the structures, there are discrete structures. I mean, because what happened to the mineralized zones in particular, like the R2, is as it got sort of compressed and extended and so on, you ended up with fragments, or what they call akai, buried or in different alignments in different places, and what used to be synclines reduced to fragments. And so you can actually say, well, Glencore have one thing and we have something else. But of course, if you were looking at it, I think like what they did with Meekatharra in Australia, there were lots of little mines, and someone came along and made one big pit because they reckoned you sweep away the cobwebs, it's easier to handle it as one thing. That's always an argument to be made. Glencore, what do they need? They don't need anything. They have plenty.
But it would make sense to combine all of those operations into one large operation.
It would certainly be a rational decision on their part.
Okay. Andrew, we've spoken about Jupiter, not much, but it's a fairly simple story. We've spoken about the Kenyan gold asset. We've spoken about the DRC copper cobalt asset. The asset we've left out is the Colombian gold asset. That's a royalty now, isn't it? It's another company that's operating it, Para,
Yes.
the El Limon mine. You're drawing a royalty from that.
Yes.
Is there much more to be said about it?
No, it looks as if it's getting slightly better. The royalties are getting slightly bigger, but they're not reaching spectacular levels. I mean, we got the money back in terms of the loan notes and the other payments, and what's remaining is just the royalty payments, and we just have to. We're not going to get rich on it. It's not going to cover our overheads. It's a decent little extra income stream that we think could get bigger.
Okay, on that note, Andrew, thank you very much. I'm afraid that's we're out of time, as we are occasionally. But great story. Thank you very much. Come back soon and tell us how it's all going.
Well, thank you.
Pleasure.
Thanks,
Ladies and gentlemen, that was Andrew Bell, the Chief Executive, the founder and the Chairman of Red Rock Resources there, talking about the company's 4 major assets. As I say, I'm afraid that's all we've got time for today. Join us. We'll be back soon with more such investment ideas. And until then, you have a very capital day.